traders and investors around the world. This is the Daily Forecast opening edition, September 28th. As always, starting in the upper right-hand corner of the screen, Dow futures. Now, some interesting stuff is happening. Friday, the Russell futures made new lower lows. But as you can see here, and I'm going to zoom in on it, the Dow did not make new lows on Friday lower than its Wednesday low. If you remember, Wednesday and Thursday, we started talking about this five-wave decline that appeared to be forming. It's a little more clear in the E-mini. I'm going to show that now. Five-wave decline that appeared to be forming. And we said that odds were, because the daily stochastics were becoming oversold, that odds were sometime in the next few hours to few days, this decline from the FOMC August 17th peak and reversal, odds were forming and rising that this move here was ending. And we would at least get a move back up to the 1950, 1960 area before prices turn lower. Now, it only took one day, Friday, pre-opening Friday and early morning Friday for 1960, 1950 to be challenged, 1960 in the cash market. This is a future. And then it failed into the close, which is this hash mark. So we had a big up open, and by the end of the day, most markets were flat to lower. The NASDAQ was dramatically lower, whereas the Dow actually held on to a positive day, mostly due to Nike, which was 90 points of the Dow's 113-point rise on Friday. Now let's look at the Russell. You see the Russell opened, went higher, reversed so dramatically that it actually closed below Thursday's day. Now, this bar is interesting in the Russell. This is called an outside down day. An outside down day occurs when, on this day, Friday, you make a higher high than Thursday and a lower low than Thursday and close at the low. This is an outside down day. If it was a key reversal day, it would make a higher high and close below the prior day's close. That in itself is a reversal signal. This is an outside down day. Bigger range than the day before, lower close. So for the Russell, this is pretty negative. We move one chart to the left, the weekly chart, we can see that within the first hour or so of today, this Russell future is probably going to test 1100. It's only 10 points lower, and it's trading at 1110 right now. Somewhere between 1110, somewhere between 1100 and 1090, we're going to have another five-wave decline on the weekly chart. And that also, if you take a look back to the right, one chart, upper right-hand corner, if we get a test down near the low 1090s, that'll test the lower 3 standard deviation band. Let's blow this chart up because there's some interesting things happening. What's coming up? Or in this case, what's coming down? Well, somewhere just below where we are now, the Russell's going to come into its green box. Its green box either signifies wave 5 down of the decline off its all-time high, or something more ominous. Luckily for the bulls, the daily stochastics are very oversold, telling us that if the Russell gets down to the green box, we're going to get a bounce for several days, something on the order of 3 to 8 days. That's just wave 2. But there are alternative counts, which we cannot rule out yet. Because of the stochastic on the daily basis, and the fact that very much more selling, or another way to say it is a little bit more selling, will bring us into the lower 3 and possibly even the lower 4 standard deviation band. Odds are a crash is not happening this week. We're not going to get a wipeout this week. Odds are, and the market can prove us wrong, odds are that we get weakness down into the green box, basically any low below August 24th, which is about 1072. Any low below that satisfies the minimum expectation for the decline from this August peak and reversal. And odds are that that's going to create a 3 to 8 day bounce. Let's see how close the NASDAQ futures are to its green box. Much further away. The NASDAQ futures have to fall much further than the Russell does. The Russell has to fall a few points. The NASDAQ has much more work to do. E-mini S&P does not have to fall as far as the NASDAQ does, although it's a significant decline. It has to take out 1831. It's at 1900. That's a big move. Can it happen? Yeah, it can happen, but odds are the S&P is going to open a little lower. It's showing down 9 points, and in another 20 points, which is a lot further lower in the E-mini, it's going to run into this lower 3 standard deviation band. So it's right off the cuff. It looks like this count of this B wave has a higher probability at the moment. So a down open today into this zone of 1890 to 1900, that's going to catch the lower Bollinger Band and the lower 3 standard deviation band. And that would also make a very pretty B wave, whereas the move off of the August 24th low was A, the down, up, down sequence into this morning probably will be B, and then C targets somewhere up closer to maybe 2000 again, 2012, 2015, give or take 15. That would take prices back up into this range as a maximum. Now, it doesn't have to get this high. It could pop up here, fail, and roll over. It depends on what's going on with the other indices. Let's take a look at the Dow and see where it rests in comparison. This is critical stuff because there's some strange coincidences happening right now with how 1987 played out, and I'm going to go over that in a second. The Dow is very similar to the S&P. Now, normally we go through all the different markets today, and we're going to do something a little bit different in this pre-market with the few minutes we have left. Listen to the similarities between now and 1987. In 1987, there was a solar eclipse on Rosh Hashanah of that year, which was September 23rd. This year, there was the partial solar eclipse on Rosh Hashanah, which was September 13th. In 1987, on October 7th, there was no crash between Rosh Hashanah and Yom Kippur. This year, there was no crash between Rosh Hashanah and Yom Kippur. Yom Kippur was last Wednesday, the 23rd. In 1987, there was a lunar eclipse on October 7th, which was the Feast of Tabernacles. This year, in 2015, there was a lunar eclipse last night on the Feast of Tabernacles. 1987, the stock market crashed, the biggest crash in 100 years, 2 weeks after Yom Kippur, starting on Friday, October 16th, and continuing for its big crash on October 19th. This year, 2 weeks after Yom Kippur, will be October 7th. Now, there's no guarantee that date for date, time period for time period will become a perfect replay. But the interesting things are the different rhymes between now and 1987. And the fact that most of these stock indices that we've just gone through show oversold conditions right now, where a 3 to 5 day rise would realign the current markets with the 1987 market right before the 1987 crash. A 3 to 5 day rise would bring prices in the Dow futures right up into here. Now, the Dow is the only index that reached its lower 3 standard deviation band last week. So this is an amazing setup which does not have to come true, but the fact that the DSE's historical pattern recognition algorithm can find these instances and alert us is going to keep us from going short today on the markets down open. We will not be shorting on the markets down open. And as a matter of fact, last Wednesday and Thursday, we were covering shorts of our profitable NQ ladder and looking for a bounce. We're getting that bounce now. Interesting? We certainly think so. We are on high alert. We are in red alert. This is the bond market. This is the 30-year bond futures. And for weeks, we have been looking for this 153 level to correct that oversold condition and bounce up into the 157 to 159 area. That happened finally last week. Stochastics just crossed down on Friday, upper right-hand corner of your chart. Red crosses down through green. The weekly stochastics, one chart to the left, have been going sideways. We'll see what happens. What's that mean for interest rates? Here's the 30-year. We were looking when rates were up near 3.01. We thought that support down in the 2.8 to 2.9 area would see a correction support, and yields came down to 2.86, right in the middle of that zone. Daily stochastics turning up, crossing up in yields starting to move higher. Into the energy complex, take a look at crude. We've been walking through this triangle for literally weeks. A, B, C, D, E, spike down into the little light green box, reversed out, coming down to test. Crude's a little bit lower today so far. And the daily stochastics are starting to curl up. This is a beautiful setup. It's a beautiful setup for this third wave big blue arrow rally to take off. Here you can see stochastics curling up. They need to cross, and that'll launch this price behavior higher. Gold's down a little bit. I'll just leave this chart big time. But remember what we talked about all last week. We were looking for gold to pop into the 1145 to 1155. It did so on Wednesday, and we expected it to come down. Look at this price behavior following this blue arrow. From here, we said up, down, up. What did we get? 5 waves up. We're in the down. Once the down is done, we should come up again. Now, the daily Stokes have crossed down, so there's more chance for some more play down here. But it's following our forecast very nicely. The DSE is very dialed in to many markets right now. Speaking of that, let's look at the euro, which has kind of gone sideways. Daily stochastics almost oversold. This decline is, for some reason, using up a lot of energy, but not taking advantage of it with falling prices. Let's see if the dollar's any more clear. Not really. It's choppy. So this correction's not yet over. But when it is over, dollar will easily surpass 100, and the euro will easily break down below 1.05. Thanks for joining us. This has been the Morning Edition.